In the energy quadrant, taking a look at September crude oil, really bad week for crude oil, worst week for crude oil since October 26th of 2020. The day itself down almost 1.5% on the day, down 1.87% on the lows. 67.80 was that low print for the September crude oil contract. So we gave up the 69 handle, which is where we traded yesterday, gave up the 68 handle on the lows. Kept it on the close though, 68.11 was the close. On the high though, we got above 70 briefly, 70.18 to be up 1.58%. But again, that turned around in toward the close. Now there's a little bit of a fear of a demand slowdown now with the rising COVID-19 Delta variant cases. That's causing more of a perception of demand decline than anything, mainly in China with some renewed lockdowns in some of the regions there, but the US as well. And the interesting thing is refinery utilization, while it rose a tiny bit from 91.1 to 91.3, is relatively flat over the last 3 weeks. So it's not falling, but it's flat, and refinery utilization represents demands on the ground. Interestingly, also the rig counts in the US are up 5 of the last 6 weeks, but still nowhere near, less than half of where they were last time crude oil was in this $70 range. So not really a fear of excess US supply coming in to push prices lower, but it's more of the potential demand slowdown with the rising cases. Now also the inverse relationship between a stronger dollar and crude oil, dollar stronger, crude oil weaker, that was a little bit of a headwind as well. The dollar strengthened pretty much all day on the strong non-farm payrolls and the rising yields. So that didn't help the case for crude oil when it was up 1.58%. As a matter of fact, the fall in crude oil happened after the non-farm payrolls number came out. So the stronger dollar, also a headwind today for crude oil prices, which finished almost 1.5% lower.